Newfound Gold has discovered what some are billing as potentially Canada's most significant discovery in the last decade. Hole NFGC01 revealed 19 meters at 93 grams per ton, starting at only 96 meters downhole. With over 70 million in working capital, Newfound Gold is well positioned for what the future brings. To learn more, find us online at newfoundgold.ca.
Welcome back to Palisade Radio. This is your host, Tom Bodrovics, and joining me today is Dr. Marc Faber, editor and publisher of the Gloom, Boom, Doom Report. How are you today, Marc?
Everything is fine, thank you, and I hope for you and your listener as well.
Absolutely. Recently, you were writing about the coronavirus tilting the global economy into a serious deflationary recession or depression. How long do you think that this quote-unquote recovery of the surreal economy can go on, and what are some of the biggest risks going forward as you see it?
Well, there is a recovery at the present time from a very low level that we reached sometimes in April. But you understand, if your airline traffic drops by 95% and it then doubles, you're still down close to 90% from the peak. But statistically, the traffic has gone up 50% from the low. It's like a tennis ball that falls from the fifth floor to the hard ground. It will rebound to the first or the second floor, and then it will drift again. In terms of the global economy, I think that we'll have a rebound. But peak economic activity that we saw, I'd say probably at the end of 2018, early 2019, will not come back for a long time. And by long time, I mean years.
Absolutely. It's hard to think that we've even seen all of the ramifications from shutting down all of the air travel, all of the trade that we normally have seen in the past. Another one of the things that I wanted to ask you about, Marc, is looking at the policies that the Fed has instituted through the lens of MMT and the QE infinity, as you've called it, and what the consequences of those policies have been.
Well, it's a very good question. I need some time to answer this. First of all, in economics, it's very debatable whether fiscal expansionary monetary policies and fiscal expansionary policy and monetary expansionary policies actually work. It's not an iron law. It's been broadcasted by the Keynesian that if you increase the budget deficit, in other words, if the government spends money, it flows into the economy and it benefits the economy. And the central bankers will tell you if they print money that it boosts spending and so forth, and that this is good for the economy. This may be true in the short run, but in the long run, it may have some very negative implications. Let me explain. We can see from statistics that in 1913, in other words, more than 100 years ago, most European governments and the US government spent less than 12% on government spending as a percent of the economy. In other words, if the economy was 1,000, they would spend maximum, say 100, 120 on government expenditures. Because of these monetary and fiscal policies that were recommended by what I call not necessarily the Keynesian like John Maynard Keynes, but the neo-Keynesian and essentially the money printers and interventionists. Now, government spending in most countries, Western countries, in our democracies, they're around 50% of the economy. In the US, it's a little bit better. It's about 42%, 43%. But I'd guess that in some states, it's more. So what this means is the government is not very productive. In fact, most activities can be done by the private sector in a better way and more efficient way than what the government is doing. In other words, with the high government expenditures, the government is actually retarding economic growth and its economic growth potential. And with monetary policies, what they've done is they've actually financed a lot of this government expansion. And if you look at the society, and this is what capitalism is about, it is about freedom of the individual. Freedom also implies that the individual acts responsibly. I think this is a very important notion. You have to act responsibly in a democracy and in order to maintain your freedom. If you act irresponsibly and you walk through the streets and loot shops and so forth, the system breaks down and there will be no economic growth, but actually a contraction. And the larger the government is, the less economic growth and development there will be. And I can assure you, already in the 60s, when I was still ski racing, we went to Eastern Europe. And then when I finished my studies in 1968, a year before I started to work in New York, I went to Czechoslovakia and I experienced the Prague Spring. And the day I actually arrived, the Russian tanks arrived in Prague to suppress the uprising of Czechoslovakia. Anyway, later I went to Russia and China in the late 70s and early 80s. And I can tell you, I've seen now in my life sufficient about the socialist, communist system to be able to state very clearly and unequivocally that socialism and communism is a disaster for personal freedom, it is a disaster for economic growth, and it will lower the standards of living of everybody. That I can say. And I just don't understand the young people today in the United States and elsewhere in Europe who wish to have more socialism. Because you want more socialism, you will have less freedom, and eventually socialism leads to rulers like Stalin, Hitler, Mao, and so forth, that are relatively unpleasant, to put it mildly.
One of the things, as you're speaking about personal responsibility and freedom, and you touched on the young people in the US, you definitely contrast socialism and capitalism a lot in your writing. Do you feel that the recent moves by the Fed are, in a way, paving the way for a more socialist outcry from the general US population?
Yes, I think this is a very good point you're raising here. The Fed actually now finances government expenditures. They financed essentially the state intervention. The state hands out money. It's actually an amazing thing when you think about it, that a Republican in the US, whereby some people will say, well, Mr. Trump is not a Republican, but it's still a Senate that is controlled by the Republicans, that they indirectly actually introduced the basic income. And when they started with QE1, that was in December 2008, I said, once you embark on QE1, it will become QE infinity, because it's very difficult to close the tab. Once you start printing money, you can close it, but it then occurs amidst enormous pain, economic pain. And the same way, now they started to hand out money, $600 a week. The impact is that most people actually earn more by not working, by staying at home, than going to work. And so there's no incentive to work. And now the $600 a week will expire July 31st. And for sure, they will have to initiate another program, and in my view, another program thereafter, and another program, and it will go endlessly. And people say, well, it doesn't matter because deficits don't matter. Well, deficits don't matter as long as interest rates are at zero, where they are actually kept artificially. But there may be one day a condition when interest rates will go up. And I think that condition may actually happen sooner than later. And then, obviously, interest payments on the government debt will become very burdensome.
One of the points I wanted to bring up related to the unemployment rate and the payments is an embarrassing moment for the Fed to experience new stock price highs while unemployment was staying at or above 15 to 30%. And like you're saying, most of these people are getting checks that are larger than what they would be making when they were working. So how can this possibly keep going? And obviously you said when interest rates go up, we could see that be affected, but how quickly could that come to an end?
Yes, exactly when it will come to an end, I don't know. And it can go on for quite some time. You know, if you print money, then there is a chance that asset prices, irrespective whether these assets are commodities or precious metals or paintings or other collectibles or real estate or equities, that these assets go up. The problem with rising assets in the current situation, and I've actually written about this, about the German hyperinflation, it increases concentration in industries and it polarizes wealth. In other words, wealth inequality increases dramatically. And that then creates, as you know, from the current demonstrations, it increases social tensions where people say, well, something is wrong here. Here we have all these wealthy people. They live in Beverly Hills and in Newport Beach and in the best areas of San Francisco and in the Hamptons and on Martha's Vineyard. And we simple people have very little. We have nothing. And we're struggling. Our insurance premiums go up every year. Our pensions tend to go down. We have no job security and so forth and so on. So it creates in a society a very, very bad climate. And during these kind of tensions, some destabilizing forces can create a revolution and really devastating hardship for people. This was the case, these social tensions were the case before the French Revolution, before the 1848 revolution, before the 1905 revolution in Russia, and then in 1917 in Russia, where the Bolsheviks took power, and this grab of power was followed. Unimaginable, horrible conditions, atrocities, where people, the white Russians killed the red Russians and the red Russians killed the white. I mean, it was horrible. And the same occurred in Germany. They didn't kill each other, but eventually under Hitler, they went after the Jews and other minorities. And so I think it's very important for a society to do what is right and not what makes stock prices go up, as the Fed seems to think that it is its mandate.
Turning a little bit, I'd like to speak about Asia. As we know, you've traveled for a long time through Asia and lived in Asia for many years. You also wrote the book, Tomorrow's Gold, Age of Discovery. And what I wanted to ask you about, Marc, was that considering the climate right now and the trade situation as it is and everything that's happening in the world, is China's expansion somewhat derailed due to this crash? And maybe we could kind of contrast the situation where China is today versus where the US is.
Yes, This requires some explanation. When I came to Asia in 1973, I had started to work on Wall Street in 1970, so more than 50 years ago. And then I went to Asia in 73. With the absence of Japan, Asia was very poor. We have to realize that they had suffered enormously during the war. And then there was a Cold War. We had the communists in China and the hostilities of the West towards Mao Zedong. We have to see this very clearly. That actually Mao Zedong, that is, he tried on several occasions to actually come to an agreement with the United States, but it was shot down on each occasion. So we had a very difficult climate also between Taiwan and China, and everybody was fearful of the communists. But from this very low level of economic activity, with the exception of Japan, that in the 70s was already a rich country, these other countries, Taiwan, South Korea, Hong Kong, Singapore, they grew very rapidly in the 70s. Partly based on foreign capital, but partly based on a high savings rate and on capital investments. In other words, they saved and invested in structures, factories, and so forth. And so these economies grew very rapidly. And today, Taiwan, South Korea, Hong Kong, Singapore are advanced economies. They're no longer emerging economies. They're high-priced economies. And they're on GDP, purchasing power adjusted, or even without purchasing power adjustments, they are on par with the US. So there has been a huge economic development in Asia. China began to open in 78, but the growth was concentrated in special economic zones like Shenzhen outside Hong Kong. And as an example, when China began to open up, say by 85, the Hong Kong population was maybe 3-4 times larger than the population of Shenzhen. Today, the population of Shenzhen is larger than Hong Kong, and the GDP that was practically non-existent in Shenzhen is today larger than in Hong Kong. So huge changes have occurred. And then 89, Vietnam also began to open up, and lately it has been Myanmar and India that suffered for years under too much regulation and socialism and policies of isolation under Gandhi and Nehru, began also to open up. So we have in Asia a wave of huge increases in prosperity and GDP per capita everywhere. And this especially, of course, in the last 20 years in China. So today you have a China that on a per capita basis still is much lower than the US per capita income. But I'd say on measurements of what, prosperity is, many Chinese are as prosperous as the typical American. And if you look at the infrastructure of China, in general, it is much better than the US. This is also understandable because of the fact, I don't know when the New York subway was built, but I would imagine around 1900. So some infrastructure in America is 100 years old, and Chinese infrastructure, by and large, is maximum 15 to 20 years old. So they have a very modern infrastructure. And they're still rolling out. Now, I'm not saying that everything is fine in China, and it is probably true that they stole some trade secrets or, patents and so forth. But the Americans did the same in the 19th century. They stole the design of machineries in England and brought them to the US, and then built competing machines in the US, and so forth and so on. So This is the normal course of business, that one benefits from the other and one copies the other and so forth. There's nothing new about that. But I have to say, the Chinese, they've worked very hard, and now during this crisis, the response of China has been relatively good, and also other Asian countries, partly because in Asia, you can tell the population, look, if you go to a restaurant, or if you take the subway, or if you go on an airplane, it is better for you to wear a mask, and please wear a mask. And then people will do it. They will not go to a constitutional lawyer and sue someone because they will say that it's unconstitutional to force someone to wear a mask. It's just for the benefit of the individual and for the benefit of society. When people are in crowded places as buses and so forth, it is better to wear a mask, period. There are some problems associated with wearing a mask, especially for very young children below, say, 2 or 3 years old. And some people who have breathing problems, wearing a mask is not particularly healthy. Like for me, I'm a heavy smoker, so wearing a mask is not very pleasant. But I do it if I have to. So the Asians also have a relatively high savings rate, as well as in China as well. And when there is a crisis, they don't need to rely 100% on the government. You can see, people say in Thailand, where I live, a lot of businesses have been hurt very, very badly. I mean, I would imagine one of the largest employer is the hospitality industry. In other words, hotel, restaurants, bars, and so forth, tourism, which makes directly something like 20% of the economy is tourist-related. But I estimate that it's more like 25 to 30% if we include what the tourists actually do, the shopping and so forth, and then finding a girlfriend and sending her money, and to be politically correct, finding a little boyfriend and sending him money or whatever. So we have now at least shown that we try to be politically correct. Anyway, that all has a huge impact, and now this is dead because the country has closed its borders. And they don't get any benefits from the government. They just go home to the family house and they live there until the clouds lift, and then they go back to work. You understand? This is the big difference. Asians are still willing to assume personal responsibility. But we are in the Western world, we have become a nanny state where everybody's a victim. He's a victim of racism. He's a victim because he has some special habits and so forth. Everybody is a victim of somebody. And with that kind of attitude, you essentially invite someone to lead you, a leader, and you abdicate your responsibility to vote and to make your own choices. You want actually someone to make the choices for you. So eventually you will end up with what Hilaire Belloc called the servile state.
Interesting. Let's turn a little bit to investing, Marc. One of your investing rules you have posted on your site is that you always want to invest where you have an edge. So where do you see that edge right now?
Well, in my case, I have a certain edge that relates to my knowledge. I mean, I don't want to highlight my academic achievements, but I'm someone who studied hard all my life, and I was curious. So I keep on reading, and I try to stay informed about different issues. And actually, for me, the lockdown has been rather positive in the sense that it's given me time to read more and to study certain historical developments that I didn't have time to do before. And also to listen to some people. I mean, I find Nowadays, there's no excuse for someone to be ignorant. You see, say, 300 years ago, only the wealthy could buy a book. The ordinary people, they didn't have the money for the books, and there were not so many books around. So someone who was poor, he had an excuse to stay ignorant. But nowadays, you have, say, YouTube, even if you don't read particularly well. There are lots of intelligent people, philosophers, scientists that give presentations, and you can watch them on YouTube. So I don't think people should use the excuse of, oh, I couldn't go, we didn't have money to go to a good school and so forth, for being ignorant. And in terms of investments, the edge is knowledge, and that you actually study more than other people. And also, I think it's an edge to have discipline. I think discipline is a very high quality in life, and discipline means in life to frequently say no. That if you have a lot of work and someone comes and says, can you do this for me? Sometimes you just have to say, no, I cannot, because I have to focus on my work. You understand? It's also, you have a responsibility towards your family. So you have to spend some time with the family, and some people spend more time and some people spend less. But we have to have some discipline. And I have a fund manager. I can tell you his name is Richard Lawrence, and the company is called Overlook. He started in 1994 in my office in Hong Kong. At the time, he had $10 million. He's given back now, I think, 1 or 2 billion, but he still manages something like $6 billion. And he has a super performance, and he has outperformed the indices here in Asia. He only has about 15 positions, but his edge is incredible discipline. He has a model, and the model tells him these companies throw positive cash flow, free cash flow, and he looks at the management. He's not an activist, but if he sees that the financial condition of a company could be increased, he goes and may talk to the management and tell them, if you implement these changes, maybe investors will pay, instead of 12 times earnings, they'll pay maybe 15 times earnings, and so forth. So he's done very, very well, and I know him also very well. He's not a genius, but he's a very disciplined and focused individual. And I think this is what many investors overlook. One day they read in a paper, oh, gold is strong. Then they go and buy gold. And then a few weeks later, maybe gold hasn't performed well, or it's performed well. Then they read somewhere in a paper that they should buy Tesla or something like this. Then they put all the money in Tesla and so forth, without any strict discipline. And I think that a part of my investment success was to focus on depressed sectors in the market, and also on diversification, whereby you hold some money in real estate, and some money in stocks, and some money in bonds, and some money in precious metals. And irrespective whether you like precious metals or not, or whether you like bonds or not, you maintain that strategy, that you own some of each category, because the bond market doesn't care whether I like it or not. It will move irrespective of my liking or not liking. And some people say, oh, I never invest in real estate. Well, that's fine. But the real estate market doesn't care whether an individual likes it or not as an investment class. I think from a prudency point of view, you should own some real estate. Now, of course, after you've established this discipline about owning different asset classes, you have to have also the discipline to diversify within these different asset classes and not to suddenly get moved to a massive overweight of the one or the other. You just have to keep this discipline. And you have to diversify. In other words, let's say we decide to put 25% of our money in stocks, then you have to diversify in some industries, in some sectors. And what many people overlook, again, whether you like it or not, you have to diversify geographically. You may be a China hater and a China basher. And in America, the many professional China bashers. For what reason, I'm not so sure. But anyway, the fact is China is going to be the largest economy in the world, as well as India will be a huge economy. And I think it is better, whether you like China or not, to have some exposure to Chinese companies.
So, as we're speaking about all the factors in the world that are happening right now, what does all this mean for gold and silver going forward?
Well, as you know, gold is up 25% this year. It's one of the best performing assets. And silver, after its recent rise, is up 26%. So we had a good move already. But if we go back, when I started to work, gold was fixed at $35 to the US dollar before 1971. And then Nixon, in August 1971, I think it was on August 18th, he closed the gold window, and then gold started to trade freely, and it promptly went up to something like $200 an ounce. And then in the 74, 75, or 73, 74 bear market for stocks, gold also sold off and declined to $105. And then it went up, and between 77 and January 1980, it soared to, at the peak, $850 on the spot market. Silver went at the time to $50 an ounce on the spot market. And then came a long, stretched bear market that made a beautiful, technically speaking, saucer bottom in the years 1988 to 1998, something like this. And then, starting with 99, the gold price and the silver price started to move up. And we had a first peak at $1,921 in September 2011. And then again, a long correction followed. 2011, we're now 2020. And the gold price and silver price, they bottomed out in December 2015 at around $1,000 approximately. And since then, we've gone up. We're now at $1,900. I think it will continue to go up, because if I look at the quantity of money in the world that has been printed in these last 70 years or so, and especially in the last 10 years, by central banks. The central banks have essentially issued paper money. And we also have a huge increase in wealth. I remember when I started to work in the 70s, there were maybe 2 or 3 billionaires in the world. Jean-Paul Getty was one, and the Rockefeller family. And there was a Mr. Ludwig. He was shipping. He was also rumored to be a billionaire. But that was about it. In 1980, there were 7 billionaires in the world. The Walmart family had become a billionaire by then, and so forth. And now we have something like 3,000 billionaires around the world. And we have institutional money, pension funds, insurance companies, and sovereign funds, and mutual fund companies. You know how much money they have in gold? Practically nothing. You know, if all these institutions have 1%, it's about the maximum. So I think that gold, the fundamentals are healthy. What disturbs me mildly at the present time is that there is quite a bit of speculation and there's quite a bit of focus on gold. So it's not an asset class which is neglected. Most people are kind of bullish about gold and silver because they say the fundamentals are favorable. That I agree. And I have had the good fortune or the discipline in my life to, starting with the 1980s, buy some gold every month. And I don't even look whether the price is up or down for my purchases. I just execute every month. It's a standing instruction with a depositor that I have. And occasionally I bought large quantities of gold. I have never sold any gold. I've sold some gold shares, but I've never sold any physical gold. And this is my pension fund because I don't trust paper money. I don't trust any pension fund, especially not the managers. And I don't trust central bankers that essentially look at their occupation as having a mandate to print money. Their mandate is to actually keep a sound monetary system, but they've repeatedly failed at that duty. So I have no trust at all in the financial system, and for that reason I want to own some gold and I want to own some real estate in the countryside.
Excellent, Marc. Well, as a real student of history, could you give us a couple of your best book recommendations to help us get through a little bit more lockdown here?
Okay. There are many, many interesting books. It also depends for whom, because if someone has economic knowledge, maybe the one or the other book is easier to read than if someone has no knowledge at all. But I'd say, let's assume someone has no economic knowledge and someone has economic knowledge. It is a very good and entertaining book that gives you actually a very concise introduction into economic history and also into economics and how central banks should actually operate. It's called Manias, Panics, and Crashes by Professor Charles Kindleberger. Manias, Panics, and Crashes. There are also other important books about manias, like Gustave Le Bon, The Crowd. It's a very interesting book about crowd behavior. And then I have another book. It's a slightly more difficult book to read, but I think it's worthwhile to read it. And it's called The Economics of Inflation. It was written in 1924 by an economics professor who worked at the time at the Reichsministerium, Finanzministerium in Germany. And it's called The Economics of Inflation, a study of currency depreciation in post-war Germany, post-war meaning World War I, by Constantino Bresciani Turoni. This is the most complete book about the impact of monetary inflation on a society. He describes in that book very clearly that when you print money, one of the things that happen is that as money becomes worthless, real estate and stocks and gold and so forth goes up in value. I also recommend by Milton Friedman, Capitalism and Freedom. This is a very important book that more young people should read. Do they want to be free and have a lot of growth potential? In this respect, I also want to recommend Capitalism, Socialism and Democracy by Schumpeter. Joseph Schumpeter is considered essentially the greatest economist of the 20th century, along with John Maynard Keynes and Friedrich Hayek and Ludwig von Mises. These are kind of the great economists, the great thinkers, the worldly philosophers. And Schumpeter wrote several books. He has a chapter where he's giving a speech to some people in New York, and that was 1 week before he died, in which he explains exactly the process, how capitalism morphs into socialism. And this is essentially what is happening now. And that's why I think that these books are very timely to read over. And I can give you another 1,000 titles of interesting books, but people have limited time to read.
Absolutely. I'm sure there's some very pertinent lessons to what's happening in the world today. Marc, thanks very much for your time today. We appreciate having you back.
Well, thank you very much for giving me the opportunity. And we have to do this again sometimes in the future.
Absolutely. We look forward to it.
Thank you very much.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?